Hello, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vase. Let me get these wires out of the way. Horrible. I got to figure out how to make my mic kind of look cool or not be in my face. I have no idea. I need like a sound engineer. And no, I know like 100 people are about to volunteer, but don't. It's not gonna. It's just gonna give me a bunch of emails. I'm not actually gonna do anything because I'm not home that much. But hope you guys are enjoying the new morning format. Leah's going to be with us for a while, and she'll hang in there. She'll learn the ropes, and she'll do great. And but because we're going to focus on news in the morning, I'll do a small price thing in the morning. I'm going to try and bring you the Bitcoin trading stuff like now in the evening, though I'm realizing that I don't have much of a life, even though I'm back home. So I don't know how much longer I'm going to be doing two-a-days. All right. So with that intro, let's go to screen share. My usual disclaimer, please learn trading, guys. I have a website. It's all free. If you go to libertylifetrail.com, you go to educational tools, you click on learn trading. Sections 1 to 5 and all the links are very, very useful. And of course, I focus on section 6. You don't have to focus on section 6. So please read all these links about Tom DeMark and the TD indicator. And then you'll be able to follow my version of it, which is a little bit different. All right, I'm going to have my phone handy here so that if anything goes wrong, at least I'll be able to see a bunch of text. All right. If the free stuff is not enough for you, please check out the consulting section of my website. And if remote consulting is not enough for you, please attend one of my seminars. It's one way people are coming out to support my work. I'm going to be doing a lot of them all throughout April. I'm actually curious if I'm able to fill the room of up to 20 people. There's also going to be 2 of them in Russia, but please be careful because they're going to be in Russian. They're not going to be in English. So if you are going to sign up for one of the Russian seminars, please make sure you understand fluent Russian. There's not going to be any translators. Everything's going to be in Russian. All right. And look over the rest of my website. I got some testimonials here. All right. Let's go to the price. Oh, before I go to the price, I did a pretty cool interview today. It's going to be out soon with 1 Minute Trader. So 1 Minute Trader was the podcast. Sarah was the interviewer. She sent out a tweet and everyone's waiting for the interview. Pretty cool interview. Check that out when it comes out. I'm sure I will retweet it, but it's not going to be out yet. It needs to be edited. Not everyone's a live podcaster, guys. Some things need to be edited. Yeah, I got Corey. Hey, Corey, can I make you an admin? Hold on. Add moderators. Excellent. Hey, Corey, you're now a moderator. Can you check that? Can you type something? I want to see the wrench next to you. Yeah, I gotta put some moderators. The chat's getting a little out of hand, especially in the morning, and I gotta get some moderators into my live chat. Excellent, Corey, you're now a moderator. I wonder if you're gonna be a moderator for just this session or for the rest of time. I'm not sure, so we'll find out tomorrow, and then I'll add a few more because I don't want to add a bunch of them every day. Well, I want to make moderators of people that I actually know. So I know a lot of you watch me every day, but still. All right, we're up to 600 viewers. Let me stop wasting time. I already got a question. Damn. All right, let me see if it kind of fits. Floor seems to be 10,500 to 10,600 level. My indicator is showing a potential bullish sign we haven't seen since November. Okay, so we'll talk about that in a daily chart. Okay, here's the weekly chart. The weekly chart is price flipping on us. That's good. The weekly chart is also above a critical Fibonacci line. That's also good. Okay. We're still in a decent posture above the doji candle on the weekly chart. And here's the best part. The best part is that as of right now, we are looking at a higher weekly close than the prior candles. Those are all good signs. Like if I had to choose, would I rather have a higher closing? Would I rather have a higher close or a higher intra candle high? And my answer is I'd rather have a higher close. I'd rather see a higher close than most recent candles than prior intra week high. Now, if I'm entering a position, I want to see a higher intra candle high. But if I'm a holder, if I'm a hodler, I'd rather see a higher closing candle. Okay, so that's how you can think of it. Okay, so there's really nothing more I can say about the weekly chart. It's possible, it is totally possible that we are in the middle of entering a bull trap on a weekly level. Now, on a daily level, it won't be a bull trap, but on a weekly level, it could. And if we are entering a weekly bull trap, it would have to come in the vicinity of 15,000, between 15 and 16,000, right? That's that typical bubble chart. That's the hyperwave chart. You know, you get that bull trap coming in, okay? And that would be probably sometime at the end of next month, I guess, or middle of next month, okay? Maybe even a little longer, but it usually goes in there fairly quickly, creating the illusion that we're going back to the upside. Okay. That's it. Nothing really more to say on the weekly. Daily. Okay, so daily, you want the good news first or the bad news first? Here's the good news. There's two pieces of good news, okay? So there's two pieces of good news here. We have a green 2 trading above a green 1, which gave us a potential bullish entry. Now, if I was to enter a position right there, I would make this position very, very small. And I would increase this position with every break of resistance. And here is your resistance, the 50-day moving average, which we are currently breaking, but we still have 23 hours to go in this candle. So potentially have broken the 50-day moving average, but you have to close above it. Resistance 1. Resistance 2 is this trend line. We're still below it. Resistance 3 is the 200-day moving average. Resistance 4 is the setup trend line at 11,248. Resistance 5 is the Fibonacci line at 11,300. Do you guys see the problem? Do you guys see how much resistance is in the way right now? You have about 5 or 6 levels of resistance that you're dealing with right now. Now, if Bitcoin can break all of these resistance, and I'm not saying that it can't, I'm just saying that it's difficult. If it can break all of these resistance and we make it back to the 11,250 area, you now have a cup and handle. Now, I am not drawing the cup and handle yet because I don't need to. I can still wait another couple of days for the price to get there. In fact, I don't want it to get there today. I want it to get there sometime like into the weekend. Like I want it to get there like Friday or into the weekend, okay? And then break out next week, all right? I have now switched to a linear chart instead of a log chart because this trend line is much more useful on a linear chart, okay? So we've broken the bearish count. I fully expected this to keep going into a 9, but hey, the market doesn't have to do what I expected to do. And once you had a price flip, boom, no position. I would have a very small position. Let's just say, let me count resistance again. The 50-day, 1, 2, 3, 4, 5. I have 5 resistance points, right? So what does that mean? That means if I was to enter a bullish trade right here, it would be 1/5 of normal size because I still have 5 resistance points to break. And then with each resistance point breaking, I can add to that position to the point where maybe even 1/10 of position size, right? Because I want the ability to double down my trade if it does turn into a cup and handle. Okay. So I have 5 points of resistance. I want to add with each one of them, but the break of cup and handle is going to be the big one, right? I want the ability to double down on my actual real trade upon the break of 11,300 resistance and cup and handle. Okay. In a way, this is better than what we saw on February 20th when all this resistance bunched up in one area. Now this resistance is kind of spread out over $1,000 range, which makes it easier to break each of the points individually. And then as each one is broken, more technical traders are adding to their position. Okay. Now, if you were to enter this trade, where's your stop loss? Very simple, at least to me and those that have attended my seminars. Your stop loss is below the swing low. I'm sorry it's so far down. This is why you enter these positions small with lots of leverage. That is your initial stop loss. Now, if we can get back, so for the audio viewers, the stop loss is in the $9,200 area. Your very first toe in the water bullish entry on a daily chart was at 10,650. Okay. So that's a big range there, right? And I would say if we can close above the trend line to over the next 48 hours, I would comfortably raise the stop loss all the way to either just under 10,000 or in the vicinity of 10,100. Okay. Let's go to the 4-hour chart. So the 4-hour chart all stopped our bullish move on a 9. So if you timed the 9 very carefully, and remember, you could have used the 1-hour chart with an aggressive 13. Actually, you couldn't have, unfortunately. I haven't released the code yet. Sorry, clients. This weekend, I'm doing my best. We found some bugs, got to fix them. Oh, I just closed my 4-hour chart. That was smart, Tone. Greatest feature ever, Control-Shift-T. I don't know what you Mac people use, but Control-Shift-T. It's like the best shortcut ever on a Windows machine. All right. So your 9 on the 4-hour stopped your bullish momentum. And I was expecting a 1 to 4 candle pullback, at least to the 50-day moving average or the Fibonacci line. Instead, what we got is consolidation, right? Now, granted, this too, and I actually have a chat log of this, right? People said, hey, you have a 2 trading above the 1. And people mentioned that in a Telegram chat, and I corrected them. I'm like, you know what? Yes, it's a 2 trading above the 1, but you have to be careful. The reason you have to be careful is that you're still below your swing high, which took place on a 9. So I always like trading 2s above 1s, but there has to be some discretion made because remember, you're still in a pullback posture. So because you're in a pullback posture, you want to wait for the break of the swing high if your 9 isn't giving you any pullbacks, right? So I would have been a little hesitant here. And again, if I was to enter a position, it would have been unreasonably small. And the problem here is that you don't have a good stop loss. That's another problem. The problem is there is no swing low. So there really is no good stop loss. And 9,300 on a 4-hour chart is not a good stop loss. So if I was to enter here, I would actually set a very tight stop loss. And I would put that stop loss below, well, you have a couple of choices. If you want to be very conservative, you put it below the 9 candle. If you want to give it a little more wiggle room, you pull it below this Fibonacci line. And if you want the maximum amount of wiggle room, you put it below the 50-period moving average. So if I was to consider entering a long trade on a 4-hour chart at 10,750, I would, the most lenient stop loss I would give it is 10,300. Okay. But I probably would not have entered this. I would have waited for maybe a 3 above a 2 and ideally above the 9 high. And you can see why I said that to a group chat, and now we're not looking very hot, right? So I would not really touch this. Now, the other thing you can do here is you can start to consider drawing a bullish pennant. So not great, but it's not great. You can also do this, maybe. It's not great. I might be stretching this thing, but the idea is you want to draw one of these. Now you want to, like I said, it's not a really good one, but it's like you consolidated, you bust it out, you consolidate it into a triangle, and then you're busting out, right? But it's usually like 1 or 2 candles in that consolidation, right? So it's not great. It's like, I don't know. It's not great. Okay. But it's generally in a bullish posture. I like it. We're above the 50. We're above Fibonacci. You got to get back there, though. I mean, again, unless we can get on a 4-hour chart, we have to go even higher, right? Like, that's the thing. On a daily chart, all you got to do is get to 11,200, 300. On a 4-hour chart, you got to get higher. On a 4-hour chart, you got to get to you got to get all the way to 11,800 in order to be really bullish on a 4-hour chart. The 4-hour chart is actually less lenient than the daily chart right now. And finally, the hour chart is totally useless, so I'm not even going to bother. That's about it for me. What is this? Wait, where'd my 9 go? What the hell happened? There was a 9 here before. Wasn't there? I've been looking at this chart every day. Do I have to go back to my own videos? Now, my code didn't change. The data must have changed. What the hell did they do? I didn't change my code. This is not an Elliott wave, right? Like, these numbers do not change. What happened? Where'd my 9 go? Yeah, so it looks like the data changed. That's weird. Data shouldn't have changed. All right, TradingView, you better get on that. I don't know what happened. I liked seeing my 9 on the yield curve. It was right there, or here. I think it was here. I'm tempted to go back to my own video here. I'll do it later. I'm not gonna put you guys through that. But anyway, I'm expecting the yields to pull back. I'm expecting bond prices to rise a little. And the S&P, I didn't really understand why it was rising in yesterday and the last couple of days, but yeah, today it pulled back a little bit. So the S&P is in a weird posture right now. I still thought we needed a secondary low, But let's see if the 50-day can hold us up. This is still S&P. So what's the difference? I think one of them was supposed to be weekly. But I don't remember which one. Man, all my charts are messed up. What's going on? Yeah, this looks more like the weekly chart. And this looks more like the daily chart. Yep. All right, I'm good. This is the futures, and this is gold. Anything interesting? Pulling back a little bit. All right. Okay, so let's just get to your QA, guys. What do we got, Corey? I don't have anything else. Though I will transition. Hey, guys, if you like my work and you want to support my work, please check out the affiliate codes. A lot of them are discount codes. And if you are going to use any of these lovely products, check them out and use the affiliate links. It's, you know, everybody benefits. All right, I'm going to stop screen share. Let's, oh, the question I was supposed to get to. Should I do it now? Yeah, let's go back to screen share. Okay, so somebody said we seems to be making a base at 10,500 to 10,600. You don't want to make a base. You never want to make a base. Like it's I don't know where this terminology comes from, right? Oh, somebody's saying I should refresh the page. Let's see. There's my 9. Thank you. There it is. I don't know what happened. Excellent. No idea what happened. That was weird. All right. Thanks for that suggestion. That was weird. All right. You don't really want to make a base, right? Like there's no such thing as a base. A base is meant to be broken to the downside. So more like you're hitting a ceiling, because when you're hitting a ceiling, you're more likely to break above the ceiling. So anytime someone uses the phrase "we're building a base," I say, "Great! It's about time it collapsed and your asset crashed." Like you never want to build a base. Building a base isn't good. You have consolidation at the top, ready to break out, but the word base, like people kept saying, people kept telling me, Tone, we're building a base at 10,000. We're building a base at 10,000. And I said, excellent. We're about to crash below it. You know, that's what building a base. That's what building a base means. We built a nice long base at 13,000. And that's why I was able to draw this arrow all the way down to 7. And then we built a base at 10,000. And I was able to draw another arrow back down to 7, right? Like, you don't want to build a base. All right, next question. I don't look like Spock that much, guys. Come on. All right, next. If we break 11,000 to 1,200, we either have a BT. I don't know what BT means. At 15 to 16,000 for leg 7. Okay. Of hyperwave, or we blow past 20K. Sure. I agree with that. Look, the daily chart is king to me right now. Like the daily chart's been awesome in predicting this stuff, other than this in hindsight. Um, so therefore, a break of 11,300 takes me straight to 13,000. A break of 13,000 takes me to 14,500. A break of 14,500 gives me open air to 20,000. And then, open air way above it, right? So we just got to get through this cluster up to 14,500 on daily. Now, the weekly has a slightly different picture. The weekly can still give you a bull trap. Now, this bull trap could occur at a double top in the vicinity of 17,500. Now, that would create a bit of an issue for me with the double top situation, which is why, if anything, I think we're going to go higher. And if there is another bull trap, it'll take place above 18,000, but lower than 20. All right. Next. How to mitigate weekly bull trap? Good question. Next. Tone. What is the difference between linear and log charts? Well, there's a big difference, right? Like here's a linear chart. Look what happens when I zoom out, right? I mean, that's the bubble to 1,000 down there somewhere, right? Like it just looks totally different, totally different. And your trend lines look very, very different. Like a lot of things get skewed. Now, some things don't get skewed. Like horizontal trend lines don't get skewed. They just get crunched a little bit. High lows don't. Fibonacci's don't. The numerical indicator doesn't. The time indicator. So a lot of things aren't affected. Like the 50-day moving average isn't affected, right? But your trend lines are. Your trend lines are because of the scale. Next. Oh, am I too close to the mic? All right, I'll move away from the mic a little bit. People told me to be closer to the mic. I'll move away from the mic. Maybe it'll be better. Next. Tone, I watched the Ether scam video, but now I'm wondering, could developer improvements to Bitcoin like Lightning mean profits are based off of the work of a third party making Bitcoin a security? I don't think so. Okay, and here's why. Because you're still not creating Bitcoin out of thin air, right? Like, no matter what you do with Lightning, right? I mean, you can be profiting from running a Lightning channel, but you're not creating a security out of thin air, right? So it's not the same thing. It's not a security if you didn't create it, right? Like the problem with Ethereum is that it was created by people, but Bitcoin isn't created by anyone. Satoshi released the code, and the code, I mean, granted, he mined the first block, so that's about it. But after that, it was over. Like 80 million, like 72 million Ethereum were just created out of thin air. There was no mining; they were just created, right? That's the security part. So Lightning cannot be a security because the asset itself is not being created. Next. I don't think Wall Street is putting any price manipulation on Bitcoin. I don't. I'm not. I don't believe in that conspiracy. It's. I don't think Wall Street cares. Next. Can you do an on the record with Martin Armstrong, please? Guys, you think it's easy to get Martin Armstrong on? I don't know. Maybe next time I'm at his conference, I'll ask him if he wants to come on. It's not easy getting him on a podcast, you know. How about this? Get me to 100,000 YouTube subscribers and an average of 25,000 views per episode without fake views, guys, without paying for the subscribers, without paying for the views. Get me to those numbers, and I'll start reaching out to like bigger names, right? I have an interesting name in the pipeline, so give me another week or two. It'll be fun. Can you explain your no double bottoms rule and contradiction that is section learn trading? There are double bottoms and triple top reversal patterns. Well, it's not really like my contradiction, right? Just because it's on a lot of cheat sheets, like a lot of like summary pages, doesn't mean that I believe in them. I mean, here's the double bottom rule, right? I'm trying to find a good example here. Like, you see how price, see how 13,000 held up the price once, and then it held up the price the second. Oh, wait, you don't see anything. All right. So you see how 13,000 held it on a closing basis, and then it kind of held it again on a closing basis for the second time, and then it held it again for the third time. I was 90% confident it was not going to hold it again at some point. I was 90% confident that we're going lower, right? Um, uh, my no double bottoms rule is pretty simple. Markets bottom like this, the way we bottomed a few weeks ago, in that you only have an hour, or not even an hour, 15 minutes to get the bottom. If the price comes back down to 6,000, unless it comes back to 6,000 like next year, if it comes back to 6,000, in the next 3 months, the market isn't accommodative enough for everyone that missed the perfect buying opportunity at 6,000 to give them another buying opportunity at 6,000. The market isn't like that. So if we go back to 6,000, I would give it an 80% chance that we're going to go way lower. That's the no double bottom rule. There's two exceptions. The two exceptions are if a significant amount of time has passed between the double bottoms. And for an example of that, if I go to FinWiz, only because I'm very familiar with the site, for no other reason than that. And I go to futures. Whoa, what happened there? I guess the sell-off took place at the end of the day. That's rare. I go to futures, and I believe it was coffee, right? On a monthly chart. Was it monthly? No, it was weekly. Right? Like normally markets bottom like this. You see this wick? See this wick? So this gotta be a longer chart. Yeah, because I wanted to show you 2014 in relation to 2009. So here is a market bottom on coffee. So the 2008, late 2008, on 100. And then after this bubble to 300, we fell back down to exactly 100 and then bounced off of that, right? So this double bottom took 5 years. That's an exception to the double bottom rule because it has passed a significant amount of time, okay? My other exception for the no double bottom rule is, I don't know if gold would go back that far. Let's go to metals. Gold. Monthly. Perfect. My other exception for the no double bottoms rule is what happened in gold between 1999 and 2002. It was so flat at the low for so long that everyone stopped caring about gold. So those are my exceptions to the no double bottom rule. But this also means that if gold was to fall back to 1,000 sometime in the next year or two, I don't believe that's enough time between the bottoms, and we're probably going to go much lower. All right, next. S&P 500 is in a bull trap. I don't think so. I don't think it is. But it could be. Yeah, right here. Sure it could. It's only a bull trap if we make a lower low, though, right? Like I would be careful. I wanted a low. I wanted another low here in the S&P, so I'm being cautious here. Like I wouldn't touch the S&P until it goes above 2850. If S&P can get to 2850, well, maybe 2840. How about that? Above this setup trend line. If S&P can get back above the setup trend, I'm very bullish on S&P for the rest of the year. All right, next. Oh, that was a no double bottoms thing. Okay, next. Do you believe in the Mandela effect? No, I'm not really familiar with what the hell the Mandela effect even is, so obviously not. All right, next. We can go a little bit longer. Keep these to under an hour, so I got like 10 more minutes, Corey. Let's see what else we got. Once we break the current trend line, will it hold above this and become a new support? Well, that's actually a good question, right? Historically, Bitcoin is so steep. Bitcoin moves up and down so steep, right? So if I extend this trend line, whoa, let me drop that. What happened there? If I extend this trend line, right? Here's the thing. If we go above this trend line, you don't really want this trend line to be support because it also means that we can fall lower to prior low, which is not good. The trend lines in Bitcoin are so steep that they don't really become support. Like if I zoom out, I have to go back to log though. If I go back to log and zoom out, do I even have the trend lines from back in the day? Oh wow. Like this trend line that we broke to the upside, like you don't want to come back and test this trend line because look how steep this trend line was going down. So like eventually this trend line like goes to zero, right? So in Bitcoin, you don't really come back and test the trend lines because they're way too steep to be retested as support, which is a good thing actually. Next, Bitcoin rose back up 40% dominance. Does dominance help Bitcoin price? In the short term, a little, yeah. I mean, it helps, right? It means there's a rotation from altcoins into Bitcoin, and there's always a rotation from altcoins into Bitcoin because you shouldn't be holding those altcoins. Eventually, it all goes back to Bitcoin. Next, what do we got here? What do you think of high frequency trading in Bitcoin? I don't think it's really like I don't care for it, right? I don't really think it exists. I don't really care for it. Like high frequency trading never bothered me. It really doesn't. It's usually picking up pennies in front of a steamroller. You're gonna get squashed. There's always a bigger whale. Next. Tone, do you think tax-free loans like Salt is is providing will be greater for bigger guys? Salt is a scam, guys. You gotta stop. You gotta stop, right? Like, there's absolutely no reason for the Salt token to exist. The reason why they're offering you, you know, tax-free loans or whatever is because they're printing their own money through the Salt token, so they don't really care. Like the creators of Sol don't give a shit if you lose all of your Bitcoin in their project. They're already rich from selling you the Sol scam token. So it's totally irrelevant. Like once you sell the Sol scam token, you're done. Like you couldn't care less about the product you're offering the people. And like that's it. They cashed out. So in a way, the sooner they get out of this garbage, like the sooner it implodes, the sooner they can walk away. And then they say, oh, well, shit happens. We got hacked, whatever. So there's nothing there, guys. Nothing there. Next. Compare the BTC volume on Coinbase to any other exchange. It's huge since February 15th. I don't know. I don't have an answer for that, right? Like I don't know who's coming in. I don't know. Next. What's your opinion of long short ETFs? I mean, I like ETFs. The problem that I have is people trading 2x and 3x ETFs, and those I'm not a fan of. ETFs are perfectly fine. They're very competent. You know, I mean, the liquid ETFs. XLF, SPY. You know, those kinds of ETFs. But stay away from the triple X, the leverage ETFs. They're terrible. All right, next. Someone says, Tone, forget the chart, gut instinct, up or down. I don't have one right now because my charts are all over the place, right? I want it to be up. I'm biased for it to be up because I'm a holder of Bitcoin. I think this resistance is going to be hard to cross. But I'm leaning towards up, guys. I'm slightly leaning towards up now. If you asked me 3 days ago, I would have said down, but now I'm leaning towards up. Someone says, I appreciate the skepticism of Salt, but for investors, is the best investment out there next to Bitcoin? No, you're completely wrong. What investment? Investment in what? Lending out your Bitcoin? That's stupid. Borrowing Bitcoin? Yeah, you can borrow the Bitcoin. That's great. What's your what are they using as collateral? Bitcoin? Well, like the project makes no goddamn sense. And it has a scam coin alongside of it. All right, guys, that's it. Corey's done. And I mean, what about Neo? Neo is the Chinese Ethereum, right? I mean, if I think Ethereum's a scam, what do you think I think about Neo, right? It's even worse. You can pay your loan back in Salt, so buy now, pay back loans when they hit 100, which they will. Well, again, right? It's just a random scam token being traded in, group chats by 12-year-olds, right? I mean, it's the the SEC is going to come down on the creators of Salt for creating an unlicensed, unregistered security, and if they don't get arrested, they should consider themselves lucky, right? There's nothing there, guys. There's nothing there. It's a .com with no developer in 1999. That's all it is. Someone says Big Swear said Saltwood Moon. Well, yeah, somebody probably gave him a shitload of salt so he can like pump it, right? And then he can be rich. I mean, all these guys are bought. They're all bought, right? This is the same guy that's been saying silver should be $5,000 since the day he was born, and he's been wrong every day, right? He's also the guy that thinks I'm a government spy. Like, come on, that's who you're gonna listen to. Somebody wants me to look at a 6-hour chart and a 12-hour chart. Sure. And we'll close out there. So here's the 4-hour chart. I'm going to use the 4-hour chart for my 6. All right, let's go to 6 hours. 6 hours is on an 8. So in about 4 hours, you're going to have a 9, maybe. If you're above the 5 candle, you'll have a 9. So another reason to take a break in the action, right? That's all I see there. No cup and handle here, even forming. It's good that you're above the 200 and the 50 is about to cross it, supporting the price. Let's look at the 12. No, it's 12 months. Sorry. Let's look at 12 hours. Oh, 12 hours was on a 9. Nice. And on a 9 off of the 50 period. Nice. Oh, and it popped on a 9. Also nice. You're on a 5 of 12, so bullish. You're bullish based on the 12 hour. All right. All right, guys. I'm gonna call it a day. I got finishing off with 1,200 viewers. Once again, if you liked supporting my work, please check out the affiliates and referral section of Liberty Life Trail. All right, guys, and I'm gonna call it a day. Talk to you all tomorrow morning with Jimmy and Leah. Good night, guys.